Good afternoon, everyone. Thank you so much for joining us for this webinar on Yale University's Dwight Hall undergraduate-run socially responsible investment fund. My name is Nicole Harmon. I'm a program manager with the Intentional Endowments Network, and I'm very pleased to have with me two great panelists to share their experience managing this fund today. We'll be hearing from Russell Heller, a junior at Yale and a board co-chair of the undergraduate-run Dwight Hall Socially Responsible Investment Fund, and Gabe Malek, a sophomore at Yale and also board co-chair of the fund. After our panelist presentations, we'll spend the remainder of the hour in dialogue responding to your questions. So please enter your questions throughout the presentation in the chat function of the GoToWebinar control panel at any time, and we'll try to get to as many of them as possible. The webinar is being recorded. It will be distributed to all registrants by email and will also be available on our website shortly after it's completed, so you can refer back to this conversation and share it with others. And we'll also make the slides available upon request. So just briefly before we dive in, for those of you that aren't familiar with the Intentional Endowments Network, we are a nonprofit collaborative peer learning network with the goal of supporting endowments and enhancing performance by aligning investments with institutional mission, values, and sustainability goals. We do this in a variety of ways, including hosting in-person forums and events, facilitating peer networking, curating useful resources on sustainable investing opportunities, and providing educational venues such as webinars like this one. We also facilitate the work of several working groups focused on topics including fiduciary duty, trustee engagement, clean energy, and student-managed funds. The student-managed fund working group offers a space for students, faculty members, and other interested parties to share current resources, events, and curriculum, and to identify opportunities for resource development that will aid in the creation of new student-managed funds, and to also expand current student-managed funds and increase SRI-related academic programs. And this group is currently working on developing a toolkit on how to develop an SRI student-managed fund, as well as putting together a database of all of the different funds and how they are structured, with the hopes that once this information is in a central location, we'll be able to use it to develop resources to advance sustainable investing curriculum and strategies in each of these funds. So if you are interested in contributing to these resources or participating in the working group, please let me know. My contact information will be listed on the last slide of the presentation, and we encourage you to stay engaged in these conversations after today's webinar. More information on IEN as a whole and the Student Managed Fund Working Group is available on the website. You can see a link on this slide, and you are also welcome to reach out to us at any time. So with that, I'll turn it over to Russell and Gabe.
Great. Hey, this is Russell here. Thanks everyone for tuning in, and thanks for the introduction, Nicole. Yeah, so I guess we can just go straight to the next slide, I think. But yeah, just a little bit about our history. Okay, good, switch. So our name is the Dwight Hall SRI Fund, and that is we're kind of part of an organization at Yale called Dwight Hall, which is the umbrella organization for community service and activism and volunteering that's existed for a very long time. That's a picture on the side there, and so we manage part of their endowment. Right now we have about $150,000 under management, and we were founded in 2007, which, you know, officially makes us the oldest undergraduate-run SRI fund in the country, which is pretty cool. But more importantly, we were created when Dwight Hall, which had previously had its own separate endowment that was managed, you know, just by Dwight Hall, decided to migrate its funds over to the Yale Investments Office, which had a much better track record and was and continues to be very well managed. But the Yale Investments Office doesn't have much transparency with their investments and has, you know, there's lots of questions about you know, how ethical some of its investments have been. So kind of as a consolation to students who are a bit unhappy about this, and to kind of remain, you know, in line with Dwight Hall's own mission, they decided to allow the students to manage a portion of the endowment. in a socially responsible way. And so that was how we were founded. And just kind of a note to take from that, if you're looking to start a fund at your school, is, these are very, unique circumstances that probably, won't happen exactly anywhere else, but just kind of the takeaway there is, when things like this happen, try and like seize the moment, and take advantage of whatever's going on that fits your specific situation. And so we were founded with $40,000 in a market-driven portfolio and $20,000 in a mission-driven portfolio. The market-driven portfolio is invested in public equities and debt. I'm going to talk a little bit about our allocation in a minute. But that's kind of a value-first approach, trying to create superior market-beating returns while also taking into account ESG metrics, and trying to create impact. And then the mission-driven portion is less focused on creating financial returns and more focused on just creating impact. And so that was started with two $10,000 certificates of deposit that we bought at CDFIs in Connecticut that invest and make loans in communities in Connecticut. And now we have shifted some of that money over to shareholder engagement, which we'll talk about in a little bit. And just kind of how we're structured legally is the students are the quote unquote SRI committee, and we make recommendations to Dwight Hall's own investment committee, which is comprised of Yale alums who are still involved with Dwight Hall now. And so we don't have the authority to make any specific decision, just because we want to. We have to kind of write a report, explain our reasoning, and then present that to the investment committee, and then they can decide whether or not to accept our recommendations. They generally do, because we generally put a lot of work into the recommendations that we make, but there is a layer of institutional institution that prevents us from being able to make quick decisions, I guess, sometimes, but it's good because it prevents us from making mistakes as well. Can we go to the next slide? Great. So just a little bit about our performance. This was at the end of August. We had the market and mission-driven portfolio values you can see there, 111 and 7,000, which was about 120,000 at the time. And the breakdown was 50% equities, a little bit over 15 in alternatives, 20% in fixed income, and 9% in cash. We're actually about to rebalance, which we'll talk about on the next slide. And just some of the old mission-driven money that kind of had gotten lost in different accounts is getting transferred back to us. So we have $29,000 coming in at the end of October. So then we'll have 150 at that point. And so you can see we've actually underperformed the benchmark that we use, which is 60% the S&P 500 and 40% the Bloomberg Barclays U.S. Aggregate Bond Index. But our Sharpe ratio is actually higher than that of the S&P, which means that the risk-adjusted return is actually better. So like we have increased by less, but our volatility has been very low, which is something that we prioritize as a fiduciary. So we've focused more on limiting our volatility and not having us have major swings, and that has led to slightly decreased returns in total, but a much more stable performance without any major shocks. Can we go to the next slide? So just to talk about the new allocation, a lot of technical stuff on here, but right now we're shifting to 35% domestic equity, 25% foreign equity, 30% REITs and alternatives, which is we're going to be focusing on water and real estate and that, and yield codes, and then 10% in fixed income. So we're decreasing our allocation to fixed income because we see it as having a inferior risk-adjusted return going forward. All right, next slide.
Hi, this is Gabe Malek. So I'm just going to go in and talk about some of the other projects that DHSRI has been working on. As Russell mentioned, DHSRI was started in 2007 to manage a portion of the Dwight Hall endowment, but since then our group has used the funds we have to look at more things, more projects we can do in this ever-evolving SRI space. The first of which is shareholder engagement. To give a bit of background on what shareholder engagement entails, if you own $2,000 worth of stock in a company, you are therefore eligible to file a shareholder resolution with the SEC. And this resolution generally takes the form of asking a company to write and release an annual report that discloses some previously not available aspect of the company's structure, whether that be lobbying practices, different aspects of where their money goes towards political campaigns. That's the most common use for a shareholder resolution. And we, in 2014, decided that we wanted to embark on this project and really see how much of an impact we can make outside of just the investing realm through the portfolio. So in 2014, we invested around $2,000 worth in ExxonMobil, and we co-filed on a shareholder resolution with the United Steelworkers Union. And this resolution essentially asked ExxonMobil to release an annual report that explained its lobbying practices and where its money went towards lobbying in greater detail. Our concern there was that Exxon, in its publicity campaigns, very frequently states that it agrees that climate change is a problem and is doing everything in its power to combat climate change, but there's really plausible concern that Exxon uses some of its lobbying money to fund groups that support climate change denial. And we thought that that was counter to Exxon's alleged mission, and we wanted to hold the company accountable to that. And so both in 2016 and this past summer, May 31st, representatives from our shareholder engagement team have attended ExxonMobil's annual general meeting to vote our proxy in favor of the resolution we've co-filed on. And we've hovered around 27–28% of shareholder votes those 2 years, which we feel is great initial progress for a shareholder resolution. Resolutions are generally slow moving, the engagement process is long and arduous, but if you keep refiling and if you kind of look at these resolutions with dedication, slowly, year by year, you can make incremental change, which we feel like will occur with this Exxon resolution. Additionally, we have undertaken a similar project with Merck pharmaceutical company. This started last year in the fall when we saw drug prices really reaching national headlines as various pharmaceutical companies inflated their drug prices to seemingly astronomical levels. And we felt like this was socially responsible and wanted to hold various companies and the industry as a whole accountable. Our approach with Exxon was that Exxon was the most egregious offender by and large in the oil and gas industry. We kind of switched our philosophy with Merck because Merck is generally one of the more progressive pharmaceutical companies. So we were looking for an institution that would maybe be more receptive to our input and perhaps take our suggestions with more weight than ExxonMobil did. And so currently we're in the process of drafting this resolution. Another change from the ExxonMobil process is this time we hope to lead file this resolution, which means that we are actually drafting this, and whether or not this resolution actually goes to vote directly depends on our involvement. And so a piece of advice to people looking to embark in shareholder engagement is a lot of it is trial and error. We're still really figuring out how to construct this shareholder resolution, and it can be slow moving. You're not going to get the majority of the vote the first time you submit a resolution, but that just makes the payoff all the better. And it's really a fantastic learning experience on top of creating substantial impact when these resolutions actually come to fruition.
Yeah, this is Russell here again. Part of the value of filing a resolution is like you force the company to communicate with you. So we have lots of calls with Exxon throughout the year. And last year, I was able to go to a meeting with, the head of investor relations and the head of government policy and the head of R&D and all these people in a really small room with a few other, institutional investors. And that's part of where we really see the impact is happening in those face-to-face conversations, those phone conversations. And definitely it's a really awesome learning experience, and just being able to get exposed to like senior executives at one of the biggest companies in the world. expressing your concerns with them, and having them actually, take you very, very seriously in that context, which is very cool. So that's it.
And yeah, we'll be getting into outreach later on in the presentation, but as Russell just mentioned, a lot of the power in these projects comes with the dialogue they create. And another thing we've been working on with shareholder engagement is involving different media outlets with the work we do. Media oftentimes can't cover just the day-to-day portfolio work that a group does. It's not catchy in headlines, but if we're a student organization that's engaging with a huge multinational corporation and actually talking with them face-to-face, trying to get them to change their policies, that's a story that media outlets want to scoop up. And getting that name out there, causing people to read about the issue, is another way that we can create impact. Moving on to community investment, we think that as an SRI fund, we can also generate impact locally. So Yale is in New Haven, and as Russell mentioned, Dwight Hall is kind of this consortium of nonprofits and community service organizations in New Haven. And last year, we thought we could tap into this network by using our connections with these nonprofits and encouraging a switch to solar energy, or maybe more simply, energy efficient upgrades. So a project we embarked on last year was essentially serving as the middleman between contractors in New Haven and these nonprofits within the Dwight Hall consortium. And we reached out to various nonprofits and essentially told them, we understand that it's difficult for you as people trying to operate the day-to-day functions of your business to look in and spend the time researching contractors and how to improve the energy efficiency of your space. So we'll kind of do that work for you. We'll find a contractor who can come to your space and give you a free energy audit and let you know whether or not there's financial benefit to upgrading your appliances. And we also could benefit these nonprofits by connecting them with the Connecticut Green Bank, which would help finance these energy upgrades. So we thought this kind of alleviates the two biggest concerns for small business owners, nonprofits, time and money. We'll do the grunt work of communication and also provide you with a funding source in the Connecticut Green Bank to help you out with this project. So last year we connected with two nonprofits in New Haven, one of them being Christ Church New Haven, the other being the Institute Library. And this is still a project we're looking to build on. Right now we're in the process of sending out another batch of emails to other groups in the Dwight Hall network and letting them know that this is a service we're offering and encouraging them to look into it. But community investment doesn't really stop there. We're really always looking at new ideas, and we have two other projects we're embarking on currently that are more recent to this year. The first being a solar panel for renters project in New Haven. The gist of the project is, again, we can provide funding through the Connecticut Green Bank, which we're connected with, to allow renters in New Haven to buy solar panels, and essentially the renters can sell the energy generated by the solar panels to their tenants and ideally sell them at a price that's slightly higher than what they would have to purchase it for. So this is allowing the renters to a marginal return, the landlord to make a small profit off this. Additionally, there are tax incentives to use solar energy, and thus the landlord can again get financial returns. So this is something we're looking into as well. The big takeaway from these projects is, as an SRI fund, the space is very open and is one in which we can constantly innovate and really look to help the national sphere and the community around us. Next slide. So another main component of our SRI fund is outreach. This consists of alumni, speaker series, and student SRI network. Because the SRI space is generally in its infancy, we believe that there's a lot that can be done to help strengthen ties between organizations and people. With alumni, a lot of our projects, especially as we look towards community investing and shareholder engagement, depend on alumni funding. Our portfolio is primarily market driven, and we can't really embark in many investments into these outside projects without getting donations. So a big thing that we focus on is contacting alumni through Yale, through Dwight Hall, and pitching them on the work we do and encouraging them that this is a valuable organization to give funds to. The second aspect of outreach is our speaker series. We believe that other students on our campus can benefit from hearing about SRI and understanding that in this new space, investment can be beneficial both financially and socially. So again, this relies very heavily on the Dwight Hall network and the alumni network through Yale, but we look for people who are in finance, in nonprofit, in the SRI world directly, and we invite them to campus to give a small discussion that is open to the entire student community. This is a good way to create dialogue and encourage people to look more deeply into what SRI entails. And the last aspect, which we hope you're all enthusiastic about, is the student SRI network. We believe that as students, we can leverage a lot of power if we kind of come together as a collective with similar goals in mind. And one major aspect, kind of why we are involved so thoroughly with Intentional Endowments, is to create this network, to get other students involved, starting their own SRI funds, and spreading the word about what SRI entails.
And co-filing shareholder resolutions also. So anyone listening, if you haven't started a fund, you want to start a fund, or you're part of a fund, and you want to work with us on shareholder engagement, I think forming a coalition of students to do this, or student-managed funds, would be very, very impactful, and just a really cool thing. And as of now, we're the only students who have done this. So it would be great to have some peers doing it as well.
Great. Next slide. So because we are doing a lot of trial and error, and working things out as we go, we do face a considerable number of challenges from month to month, meeting to meeting. The first of which is one that we'll all face as student organizations, which is consistency throughout leadership groups. Obviously, we have seniors graduate, and it's sometimes difficult to, looking at point 2, maintain institutional memory. What we've been trying to work on recently to combat this challenge is really better organize and aggregate the information within just our Google Drive profile and digitize information that we have at hand. And organization is key, making sure that we have past reports that we can look back on in case we ever need to communicate with the Dwight Hall Investment Committee about performance. Just learning from past experiences is crucial, and we've been working more and more to document our work in a more clear way.
Yeah, and so something that we actually did this year, or this summer rather, was we just created a document called Institutional Memory, where we're essentially writing down, our organizational history, how we're structured, things that we do, things that we've made mistakes on, and how we can kind of learn from these things. And we're having, sending this out soon to our new members who just joined, having them read that, so to kind of bring people up to speed, because year to year, just like Gabe just said, a lot of people graduate and we lose a lot of institutional memory. So maintaining that is key. Yeah, the other thing is, alumni and faculty support. We've had some faculty more involved at times and less involved at times. But the key thing is our investment committee has worked really closely with us, deciding allocations, picking investments, and that's helped teach us a lot. We're very fortunate to have people who've worked in this finance sphere for a long time, who have a lot of knowledge, who are very generous with their time with us. So just kind of a key thing, I think, is building relationships with faculty and alums and just people who care about the mission, who are willing to, give you some of their time in their busy lives.
And I would add that faculty support does extend beyond portfolio, as you all consider shareholder engagement. Faculty support becomes crucial because, as we discussed before, DHS has been researching ExxonMobil and Merck, companies that are in two vastly different industries. And so it becomes helpful to tap into the faculty knowledge on campus, people who devote their careers to understanding the issues in these respective industries, and these people can really better inform the work we do.
Yeah, and then another challenge is just calculating the impact of our investments, which is something that we see as quite difficult, especially because almost all of the investments that we make are through funds. So we buy mutual funds and exchange traded funds, or ETFs, which are kind of baskets of companies. And so when we're looking at those, we look at, each one has its own sort of set of metrics that it looks at, and how it looks at ESG, and how it looks at its own impact. And so we love looking at funds that do a lot of shareholder engagement on our behalf. They'll be engaging with the companies that we indirectly own on our behalf, trying to create positive social impact there. That's something that we see as vitally important. Actually, a former member of our group, who I believe is listening right now, Gabe Malek, just co-founded a company with one of our advisors and another Yale student called Real Impact Tracker that has a methodology for analyzing how impactful mutual funds are. And that's something that we're actually taking into account now quite directly in our investment process. And that's a really exciting development, because right now there isn't much out there that really, that someone's, a fund of our size can really use to be calculating impact. Awesome. Yeah, I think next slide. I think that's it. That's it for us. Let's see.
Now, if there are any questions, we'd be happy to answer.
Great. Thank you so much, guys, for that wonderful presentation. So for the audience, please continue to type your questions into the chat box. We've gotten some great ones so far, and we'll get to as many as we can. For a first question, in relation to the shareholder engagement process, could you guys speak to what prompted this engagement and how it related to the fossil fuel divestment movement?
Yeah, I think that's a great question. This is Russell, by the way. So two of the guys who actually led the shareholder engagement project in our group were, one of them was the co-founder of Fossil Free Yale, which is the divestment movement on campus, and then the other was very involved essentially from the beginning of his freshman year. So it was interesting because we kind of had people on both sides of the debate, and once it kind of got to the point where it seemed as though Yale was not going to divest from fossil fuels, or at least wasn't anytime soon going to divest, we thought we might as well try engagement. Yale has an ethical investment policy policy, I guess you could say. It's based on this book called The Ethical Investor. And in that it says, the university won't divest from a company or an industry unless, you can prove that there's been grave social injury, and that all other kind of options, I guess you could say, have been exhausted, that engagement being one of them. So we wanted to test the hypothesis and see, does engagement work? Can we create impact through engagement? If we do, great. We've succeeded, and hopefully Exxon is a better company, and therefore the world may be a slightly better place. And if we fail, or if we're kind of deemed a failure, I don't think we think that at all at this point. But eventually, if we keep trying and we don't see there being much tangible impact, then that lends more weight to the divestment argument on Yale's campus, saying that we've tried engagement and that hasn't worked. Now we've exhausted all our options, and divestment is the only option. And so we actually had Yale University support for the resolution in the last 2 years, and they voted in favor of the resolution, which has been great. And so we've worked with the Committee on Investor Responsibility, or the ACIR, which votes Yale's proxies and determines the ethical nature of Yale's endowment and how it's managed. And so we work closely with them on that. so it's a debate that we're very much a part of on campus. We think that there's room to engage, but that's, definitely open to, any opinion that you might have. But yeah, I don't know if you have anything to add to that.
Awesome. And could you talk a little bit more about what other institutional investors you're engaging on these shareholder action activities and why that's important as far as filing?
Yeah, absolutely. So I can start with why it's important. As a student SRI fund, we are only owning the bare minimum to file a shareholder resolution. So we have about $2,000 of stock in these enormous corporations, which means we, by ourselves, can't leverage a ton of power, which means that it's super important that we contact and get the support from other big institutional investors that own much larger chunks of these companies and can then vote their proxies for our resolution, which will garner a much larger percentage of the shareholder vote. Moving on to the groups we actually reach out to, we feel that our best bets are SRI asset managers because we feel that these institutions already have similar goals and outlooks as we do as an SRI fund. And aside from purely looking at the SRI world, we engage a lot with corporate activists, people who do write shareholder resolutions and involve themselves with corporate activism for a living. So these are other groups we reach out to. Our work has been heavily informed by the ICCR, which is the Interfaith Coalition of Corporate Responsibility, as well as for the Exxon resolution, at least, we communicated with the Union of Concerned Scientists, the Tri-State Coalition, which is a New York, New Jersey-based, again, corporate activist organization that supports most of these shareholder resolutions that are brought to the table in a lot of these corporations.
Yeah, and also on Exxon, we co-filed. There were 8 or 9 other institutional investors that we worked with. The United Steelworkers Union, the Swedish National Pension Fund. I can't remember the names of many of the other ones, but we have calls together and kind of come up with strategies for our engagement and our, how are we going to go about what we're actually doing? How are we going to create impact? That's all really important. Collaborating is definitely key, and that's why we want other, just going to keep saying this. That's why we want other, student funds to be joining us in these collaborative, efforts.
So in addition to joining you guys in these filings, what other first steps can you identify for students to take at their own funds to start the shareholder engagement process?
I'd say a crucial aspect of starting any shareholder engagement is finding an issue that you're passionate about. When we started our planning for the Merck resolution in the fall of last year, we spent almost 3 weeks just brainstorming an idea. And so this really started with everybody on the shareholder engagement team voicing what issues they're passionate about. We wrote everybody's issue, social issue on a whiteboard, and then went one by one and discussed how viable is this in an investing context? Can we actually make change through shareholder engagement, or is this an issue that needs to be tackled through a different activist approach? And so one by one, we kind of narrowed down what company could we associate with this problem? Could we actually file with this company? Who would we contact? Would we have enough resources to engage with people familiar with the company? And slowly we narrowed it down to the pharmaceutical industry and eventually Merck. So I'd say, aside from the funding aspect, aside from the outreach aspect, it's important to be tackling an issue that group members actually want to see changed and actually want to see impact in the addressed industry.
Great, that's great advice. So shifting gears a little bit, could you tell us a little bit more about how the Community Investment Initiative started and how the returns from that initiative compare to your market rate investments?
Yeah, so So it started last year. We'd been having discussions about doing something, in New Haven, in the area, so that we could kind of see ourselves having maybe a little bit more of a tangible impact. We haven't made any loans yet. One of the church that Gabe mentioned that we work with did actually end up buying a boiler, but a high efficiency boiler, so that was great. But they didn't want a loan, so we didn't finance that for them. And we're still working on this. It's kind of a young project at this point still. So we don't know what the returns have been. I can say that we bought certificates of deposit with some CDFIs earlier in the life of the organization, and actually the financial crisis didn't. One of the CDFIs actually went bankrupt, which wasn't great. But it was FDIC insured, so we did get our money back. But we don't see that as necessarily a high return asset class, I guess, for us. We see that as a way to have more impact and just kind of learn about how do you structure a loan? How does this work? What's a power purchase agreement? How do you finance solar energy or energy efficiency? And so yeah, so I think it's more kind of a learning exercise. Hopefully, we will definitely be able to gain a return from that, or from those investments. But it's definitely more impact driven.
Great. And for the overall portfolio, do you consider ESG criteria when you're choosing investments, and what are your methodologies for evaluating that criteria?
Yeah, absolutely. We absolutely do. So one of our advisors, who's a professor here, his name's Kerry Krasinski, and he wrote a piece called "The 7 Tribes of Sustainable Investing," which I highly recommend. It's very short. It's the preface to his most recent book. And if anyone's interested, I can send that to you very easily. Emails are firstname.lastname@yale.edu. But yeah, so there's kind of different approaches to take. There's values first, where you're looking at excluding industries and just trying to focus on impact and not as much on financial returns. There's value first, which is kind of using ESG criteria to find ways to create outperformance in the market. And there's different shareholder engagement, and there's different sorts of impact investing, different sorts of ideologies that we take. I think we're a combination of a lot of things. And it varies also a lot on the funds that we own. So each fund has a different criteria. They all say they use ESG, but there isn't a ton of transparency as to what specifically that means in their investment process. So it's very different with each fund, and you need to read through lots of materials on the funds and look at their holdings and look at their engagement history and talk to them and call them. And doing that sort of rigorous research is very important, and that's something that we're actually in the middle of right now, because we're about to rebalance the portfolio and buy some new holdings and get rid of some of the things that we currently own. But yeah, so we definitely do incorporate ESG. Each of the funds does it in a different way, and that's something that we kind of like to not put all of our eggs in one basket. But we definitely one of the key things is shareholder engagement, and we like to own mutual funds that and ETFs who vote their proxies in a way that we like, and that engage and try and promote ESG, in the public sphere. And these are a lot of the things that I was mentioning earlier. The Real Impact Tracker has taken into account in their methodology. So a way that we kind of look at that now, through at least on the impact perspective, is we look at their ratings.
Great. And for students that are looking to start an SRI fund at their school, how would you recommend getting started? What first steps would you look to?
Yeah, so it's every fund is going to have a different founding history, I guess you could say. So our friends at Harvard, they actually officially aren't a fund yet, but they started as just a group that was talking about SRI and about ESG investment on campus, and hosting speakers and bringing in kind of thought leaders and doing research. So I think the best place to start is just kind of getting a lay of the land and trying to understand the landscape. What is the space? What can you do, and what can you provide? Kind of yourselves, and like how can you get to the point where you're informed enough to actually be making investment decisions. We're working on the how to start a student SRI fund document, and like that'll soon be out, and I think that has a lot of other useful information in there that you can kind of read through. So I don't want to list off everything, but yeah, that, and then also looking at donors and potential funders. If you have, like, look at the SRI funds that exist, see if you have alumni that work there and, they're going to be willing to advise you. Those are the sorts of things that'll help you get donors, or maybe those people themselves will want to donate, to help seed a fund. But yeah, funding is definitely really, really difficult to acquire, and you kind of just have to keep sending out cold emails and making sure that you're as prepared to have these sorts of conversations as possible, I think.
Yeah, and in that preparation process, trying to familiarize yourself with SRI, I think it's extremely important to tap into the resources of your professors on campus. Most institutions can offer you support via faculty who are much more familiar with the SRI world, investing, sustainability, than we as students are. And so in our experience, most faculty have been really enthusiastic to collaborate with us when we've mentioned our goals and our mission. And it does not hurt to send out emails, cold emails to faculty members you already have a foot in the door and that you're both members of the same institution.
Great. So we are almost out of time. No, Gabe and Russell, do you have any closing remarks that you'd like to leave listeners with?
None that we prepared. I would say, thank you definitely everyone for listening and being on. I hope this was useful. Please feel free to reach out to any of us, I guess, either of us, about this. If you have any questions, or if you want help with any, specific things that you want to follow up on that we maybe didn't touch, or you want to touch more in depth, like, we're willing to talk on the phone, respond to emails. Yeah, I mean, it's great that, hopefully there's a lot of students listening right now who are, trying to start funds, who have funds, and they're trying to kind of ramp up. It's love to see it.
Yeah, I mean, as you mentioned earlier in the presentation, one of our main goals for this year was to really have a student network more established and more robust. And so this is one of those steps along that path. And we really believe that we'll be stronger as a collective, whether it's shareholder engagement, community investing, even spreading the word about SRI in a portfolio sense. So we are really enthusiastic to talk with you and really hope to hear from you all in the future as we look forward to starting or building on your own endeavors.
Well, thank you both for the great discussion, and thank you for participating in this webinar, and thank you to all of our participants for joining us this afternoon. If you have any questions, again, about this webinar, the Student Managed Fund Network, or other activities happening at the Intentional Endowments Network, please do be in touch. All of our emails are listed on this slide, and this webinar will be up on the website shortly. So thank you all again, and have a great afternoon.
Thank you.
Nice.